On a cold Thursday morning in Washington, D.C., a headline sent shockwaves through the financial world. Beijing signals major shift in U.S. Treasury holdings. The news was dry, but the implications were immediate. Phones rang non-stop at the Treasury Department as analysts scrambled to interpret the data. China, long the largest foreign holder of U.S. debt, was rapidly moving its reserves away from U.S. Treasury bonds. This wasn't a routine adjustment. It was a clear, calculated message. Inside the White House, an emergency economic council convened. The president and top advisors listened as experts outlined the potential fallout. The timing was no accident. China's move came amid U.S. political division and economic uncertainty. It was a reminder that economic leverage can rival military power. The story dominated headlines, with experts explaining that a major creditor was signaling doubt in America's stability. For most Americans, sovereign debt feels distant, but the tremors from Beijing's decision were already crossing the Pacific. The foundation of the U.S.-China financial relationship was suddenly in question. The stability Americans took for granted was now at risk. The world watched as the U.S. faced a new kind of threat, one that could shake its economy to the core. The question was no longer if this would have an impact, but how severe it would be. The financial heart of the nation braced for aftershocks. The era of easy borrowing was over. The consequences were about to get real. What did China actually do? It sold off nearly $150 billion in U.S. debt in just one quarter, a dramatic departure from its usual slow adjustments. This wasn't a quiet rebalancing. It was a bold declaration of a new strategy. By reducing its holdings, China is signaling less confidence in the U.S. economy and using its financial power as a geopolitical tool. The message: our support is not unconditional. The move followed escalating trade disputes and tech rivalries, opening a new front: financial warfare. China isn't just selling bonds, it's redirecting funds into gold, other currencies, and global infrastructure projects. This diversification is a push for a more China-centric financial system. Why does it matter? The U.S. relies on selling Treasury bonds to fund everything from defense to social programs. For decades, the world's willingness to buy U.S. debt was a given. China's public retreat challenges that assumption. Washington and the world must now face a new reality. America's biggest creditor is stepping back. The U.S. can no longer take global financial support for granted. The balance of power is shifting. China's move is both economic and political. The global financial system is entering uncharted territory. The stakes are higher than ever. The world is watching. To see the impact, let's visit a supermarket in Columbus, Ohio. Sarah, a mother of two, doesn't follow global finance, but she's about to feel its effects. As China sells U.S. bonds, the Treasury must offer higher interest rates to attract buyers. That means higher borrowing costs for everyone: mortgages, car loans, credit cards. Sarah's monthly expenses rise, leaving less for groceries and savings. The supermarket owner faces higher business loan rates, forcing him to raise prices. Milk, bread, and produce cost more, not because of supply issues, but because of a decision made in Beijing. Multiply this by millions of families and businesses, and the squeeze is nationwide. Higher borrowing costs slow the economy, cool the housing market, and threaten jobs. What started as a strategic move in China becomes a daily struggle for Americans. Geopolitics has landed in the shopping cart. The ripple effects are just beginning. How did China become America's banker? Decades ago, China's economic boom led to a flood of exports to the U.S., creating a massive trade surplus. With billions in U.S. dollars, China needed a safe place to invest. U.S. Treasury securities were the answer. Buying U.S. debt kept China's currency cheap, making its exports even more competitive. This created a cycle. China sold goods, earned dollars, bought U.S. debt, and fueled more exports. The U.S. got cheap goods and easy financing. China got growth and a safe place for its wealth. But this codependency came with risks. The U.S. became reliant on Chinese financing, while China's fortunes were tied to the dollar and American consumers. It was a marriage of convenience, one now under strain. As China steps back, the vulnerabilities of this arrangement are exposed. The U.S. faces the consequences of years of easy borrowing. The global financial order is shifting. The old system is breaking down. Both nations must now navigate a new, uncertain reality. The stakes are global. The world is watching this unravel. The next chapter is unwritten. China's sell-off is more than a financial move. It's a show of power. As the biggest buyer steps back, the U.S. must offer higher interest rates, raising borrowing costs for everyone. More tax dollars go to interest payments, leaving less for infrastructure, education, and defense. Lawmakers face tough choices: raise taxes, cut spending, or borrow even more at higher rates. The dollar's status as the world's reserve currency is at risk. If others follow China's lead, America's financial advantage could erode. The psychological impact is huge. A signal of doubt can trigger a domino effect among global investors. A crisis of confidence could spark a severe downturn. China's actions remind Washington that U.S. stability isn't guaranteed. The power dynamic is shifting. America's financial dominance is being challenged. The world is watching for the next move. The stakes are not just economic, they're strategic. The U.S. must respond wisely. The balance of power is in flux. The effects reach deep into American life. Higher interest rates make home ownership harder, pricing families out of the market. Adjustable rate mortgages get more expensive, straining budgets. The housing market slows, threatening jobs in construction and real estate. Retirement accounts suffer as markets turn volatile and bond values drop. Economic anxiety grows, changing how families spend and save. Consumer caution slows growth, creating a self-fulfilling downturn. The American dream feels more distant. A decision in Beijing becomes a personal crisis for millions. China's move isn't just economic, it's geopolitical. By weaponizing U.S. debt, Beijing challenges American dominance and asserts global influence. The threat of further sell-offs gives China leverage in diplomatic crises. U.S. negotiators must now consider financial risks in every major decision. China is building a parallel financial system, appealing to nations eager to escape dollar dependence. America's debt is now a national security issue. U.S. foreign policy is constrained by its reliance on foreign capital. The Treasury's decisions are now linked to Beijing's strategy. The world order is being rewritten. Washington faces tough choices. Retaliation risks global economic chaos. Seeking new creditors is a temporary fix, not a solution. The Federal Reserve could buy more debt, but that risks inflation and a weaker dollar. Each option has serious trade-offs. Years of deficit spending have left the U.S. vulnerable. The era of easy choices is over. Navigating this crisis requires political courage and long-term vision. America must rethink its financial strategy. The stakes are global stability and national security. The world is watching how the U.S. responds. Beijing's signal is a wake-up call for Washington. The U.S. must address its debt with real bipartisan solutions. Responsible spending, entitlement reform, and a fair tax system are essential. Restoring confidence means showing the world America can manage its finances. Investing in education, innovation, and infrastructure will strengthen the economy. Reducing reliance on foreign creditors is key to national security. America must also strengthen alliances and lead a stable, transparent global system. China's challenge is also an opportunity to rebuild, innovate, and lead with purpose. The time for action is now. The world is watching America's next move.